Everyone, I'm Julian. How you going?
Good evening. I'm Paul, if we haven't met. So welcome. Today, Julie and I thought we'd just jump on. Ideally, we'd like to give you the opportunity to type comments in, get in touch and ask any questions that you might have around commercial leases. So myself, I obviously have a fair bit of experience in reading through leases, both on behalf of clients and with my own businesses over a sort of 25, 30-year period as well. So I've seen a few changes, seen a few things, and Julian, I'll let you talk through your experience, but you probably even stronger experience in this field than me.
Oh, thank you. Very polite. Yes. Well, I've held I've held leases personally and negotiated leases personally, and certainly made some mistakes. And then I've worked for an international institutional landlord on big shopping centres negotiating food and beverage leases. So yeah, I've negotiated a lot of leases for landlords and for retailers on both sides. So yeah, it's certainly handy understanding both sides. And that experience is just been paramount to be able to pass on to everybody today.
Absolutely, yeah. So look, if you've got any questions at all, just feel free to put them in the comments below, and we'll do the best we can as we go through to answer those for you. If you're watching this after the live session, please do the same, and if we can, we'll come back and answer those questions in the comments for you. So kicking off, we'll just talk firstly, Julian, about your lease and the value. So if you're looking at purchasing a business or purchasing, any opportunity that involves a lease, let's just talk through where the value lies in that lease document.
Yeah, so I think it's important to really understand where the lease sits in the value of the business, and whether obviously if you're buying, eventually you may sell, and understanding your lease coming in and going out is really, really important. So it's one of those things I think we find that people, once they've bought a business, they've sort of put it away and don't really look at it again. And I think it's really important to really take the time when you're buying a business to understand the lease. It's not that you need to understand every single clause within a lease. It's just that you probably need to understand the key items. What you're liable for effectively, and what effectively you're going to be paying every single month, and obviously how long the term is, and if there's any options available. So I think when you're buying a business, it's great to understand where that lease is, where it sits. Even within your business, have it in a folder, have it in an area that you can access quite easily, and just really familiarize yourself with those key items. I think people, once they've bought the business, they just forget about the lease and that's it.
But I guess if you've done the due diligence in the front end and you've gone into it and you've really read through and understood that lease and got everything where it should be and then signed, you can, I guess when you take the business over, and I know I've certainly been guilty of this, you can kind of just push it to one side, because until you come to sell or you come to the end of term, you don't need to worry about it too much. So it's really key to understand in the front end, and I guess get some good advice around what you should and shouldn't be looking for when you're ready to lease, especially if you haven't done it for the first time, because it can appear to be in a different language when you read some of it. As I said, those. Maybe that's a good thing to touch on then. So what would you suggest are the key terms for somebody looking to buy a business and reading a lease? What are the key terms that people should be looking for?
Yeah, I mean, it's really interesting because I think a lot of people, obviously the first thing is they look at is rent, and that's obviously extremely important. But understanding, okay, is it net rent versus gross rent? That's one of the first key areas. So you will get leases that can be a net lease and a gross lease. So the first thing is a net lease is effectively base rent only. And that's obviously the rent component of the rent. And a gross lease can include rent, outgoings, and in shopping centres, marketing fees as well. Okay, I think it's really important to understand, is your lease a net lease or a gross lease? Okay.
Yeah, and I think there's quite often, I've experienced, there's a lot of confusion with people there, because usually the term obviously net and gross relates to GST. So people, I've found, have got confused with that, and that difference between the gross and net in relation to outgoings can be a lot more significant than the rate of GST. So it's really, great point. Very, very crucial that you understand what you're actually paying for. And that typically, I'm not sure about every state, but I know certainly in most states that a lot of that outgoing side of things, the level of outgoings, what's going to be charged, is covered in the lease disclosure. And is that the same in Queensland?
Yes, it is. Yeah. Yep. Okay. So everything's got to be listed as to what forms that component of the outgoings. And so so I think if you get in the habit of looking at your lease as well as a gross figure, then every single month what everything is inclusive that you need to pay. So quite often I've found, in the marketplace, you say to someone, "What's your rent?" And if they may say $100,000 a year, but that's just the net rent. When you add gross, between marketing and outgoings, that could be another $20,000, $30,000. So, you got to look at all your benchmarking and everything as a gross figure. So that's the first component.
Sorry, Julian, just on that point, just for those people that aren't familiar with the term outgoings, again, that's something that I find does spark confusion at some point. So what's in the relation to the lease, what's determined as outgoings? So
it's usually the maintenance of the property, in terms of that will be maybe gardening or painting and the likes to actually run that property. So all the fees and charges that are relative to run that property will be passed on to the tenant. Okay. And now those items need to be obviously audited, and the landlord needs to provide you with those items and what the expenditure is every year. So you can see exactly where the money's going and what the rates are. And you generally pay a proportion of that as to what square meter site or location that you actually do have.
Oh, okay. So, So it's all pretty much based typically on the size of the premises.
Yeah. So if you've got 5 people in one building, the outgoings for the entire building will be split up per square meter per tenant. So everyone will be paying the same. But they'll just split it up by square meter.
So it's prorated based on square meter.
Yeah.
Perfect.
Yep.
All right,
and it's an audited. It really is an audited cost in terms of it's not a profit for the landlord. It's just passed on to the tenant to pay to run that building.
And is the landlord legally obliged to report on that at certain periods? Okay.
Yes.
Is that quarterly, annually? How does that?
I think annually. Annually.
Okay.
Yep. And so outgoings can go up and down. And I've certainly seen outgoings go down as the landlord can obviously negotiate better contracts to maintain the building and the like. So they can go up and down, and they shouldn't really vary that much, to be honest. And if they do, then ask the question, why? What's going on?
Enough. Okay, great. So just quickly, for those of you that have just joined us, Julie and I are going through just a few of the key points in relation to retail leases, to leases in general, commercial leases. So if you've got any questions at all, please feel free to post them in the comments below, and we'll do our best to answer any questions you might have in relation to leasing. At the moment, we're just talking about some of the key terms to understand, and Julian's touched on obviously rent and outgoings being a big part of that. What else would you say is a key term, Julian, that we need to look at when considering a commercial lease?
Yeah, so when you're going down, it is obviously your rent reviews each year. So that will be what your rental amount increases on the anniversary of your rent each year. Now, that can vary greatly. You can have CPI, or you can go all the way up generally to shopping centres, and probably your major shopping centres being still at 5%. Now, that's starting to come off a little bit, obviously, as the market's evolving and changing, and some shopping centres are doing CPI plus 1 or CPI plus 2%, or 3 or 4% review. So that figure effectively means your rent goes up every single year on the anniversary by that amount. And it's really important, I think, for retailers and people buying a business to understand when that is. And what that amount is, because a rent figure when you start to where you end can be extremely different.
100%. And those those terms, like many terms inside the lease, they will have they'll have a play in where the value of the business sits, and what objection you get and how you can position the business to sell. So if you've got an aggressive lease with high increases, it will affect the value of the business. So that negotiation at the point of sale, if there is room to negotiate, if you're negotiating a new lease, the more favourable these increases are, then the more benefit you get from the from the exit process as well. So okay.
And it's a really valuable point that you made, though, is that if you're buying a business and you've got a lease and these key items that we're saying, and again, these are on our GSE hub, which we'll go through shortly. But to understand these items is that when you are, in a position to renew your lease and there is some negotiations available, you can start to negotiate some of these key items. Okay. So if you're not aware of them, obviously, and you renew and you just say, yes, great, I'll take another 5 years without negotiating some of these items, you end up again with a non-favorable lease. So some of these items are definitely negotiable that you need to be aware of as the market moves and changes.
Yeah, 100%, and it's quite unusual for people to actually renegotiate, isn't it? At that point, I think a lot of people are of the assumption that when the lease rolls over and they go to renew, that the terms have to stay the same. But you're actually in a much stronger position to negotiate better terms than you were probably when you took the lease on in the first place, because you've established a relationship with the landlord. Hopefully you've proven that you're a good tenant, that you pay rent on time, and so on. Then it is a great opportunity to get in and leverage that relationship and try and get more favorable terms with the exit in mind. Ideally, obviously from my background and what I preach all the time, the more you can put around exit planning, the better, and this is a great time to do it as well.
Yeah, and I think you can't be scared to ask the question. I mean, you've got to ask it when you're going for a lease renewal. Everything's got to be done on facts. So you need to understand the metrics and, what your rent is as a percentage to your turnover. So you're providing the landlord with information that he can make or she can make or they can make if it's a company owned. They can make a decision on, but you need to give them the facts. But, 100% of the people who are listening to this, if you go through a lease renewal, you must ask questions on renegotiating some terms of your lease.
Yeah.
It's just has to be absolutely a process. You just need to do it.
Okay, great advice. So, all right, and what else have we got that's
definitely options
that we should be looking at? Okay,
yeah, definitely options is a big one. So understand, obviously, you can have leases that are straight terms or straight periods. So for argument's sake, we say 5 years and no options, or then you can get a lease that may have 5 years plus 2 year option plus another 2 year option. So at the end of your term, you've got the option to take up another 2 years. Now that's extremely important to understand where that sits in a business that you're purchasing, and also around the dates when you need to take up that option.
Okay.
I'm going to say that. I'm going to say that again. Is that there will be So if you're coming to, you're in the last year of your lease and there's a 2 year option, you need to have written in your diary on every phone and every digital appliance that you have the date that you need to take up that option in writing with the landlord.
Yeah, it's a great tip, and that's something I've witnessed several people, that have come to us about selling, and we've looked at the lease and obviously seen that they're in the option period, but they haven't exercised it. Yeah. If you haven't exercised it within that window, and correct me if I'm wrong, we typically see a window of between 6 months out, but no less than 3 months. So if you, as you said, if you miss that opportunity, there is a potential there that the landlord, could not renew the lease or allow you to exercise the option. So, great call.
I've seen it happen. I've seen a landlord decide that they didn't want that tenant, and they didn't take up their option in time, and the landlord has said, "No, we're not renewing you. You're done." So generally 6 months minimum, but you need to check it, and I would be doing it well before that to make sure that it's all done and dusted. The option periods is a really important component that you need to understand. Probably another area that I think people don't take much time to understand is percentage rent. Certainly in a lot of shopping centres.
What is that for people that don't know? How does that work?
Yeah. So a lot of leases will have, and again, certainly 100%, if anyone's buying a shopping centre business, there'll be a percentage rent clause in there. But effectively, it is a percentage of your turnover that you will effectively pay rent on, which will kick in at a certain threshold. Okay. So if we said you have 10% rent and your net rent or your base rent is $100,000, so you divide that, effectively you divide the rent by the percentage rent figure, so 100,000 divided by 10%, which will calculate out to $1 million.
Right.
Okay. That's the threshold. So then anything in your turnover from $1 million above, you'll pay 10% back to the landlord.
Okay. Is 10%, is that a typical percentage? Is that
it's usually where it starts. Yeah, it's usually where it starts, and it's negotiable. And you need to be aware that I've seen businesses that are trading along okay, then they hit the threshold and all of a sudden they get a rent bill from the landlord for 10% above. And shocks the hell out of people. So it's just something that you need to be aware in your lease, and it is negotiable.
Okay.
Yeah. So the lower the percentage rent figure. So if you go from 10, from argument's sake, down to 9, down to 8, down to 7, the threshold obviously just keeps going up and up and up before you pay that figure. So you want to negotiate as low as possible. So for cafes and that are doing really well and paying minimal rent, if that percentage rent figure, clause is in the lease, try and negotiate it down to 6-7% if it needs to remain. So give yourself a buffer.
Like for a standard cafe in a shopping centre, what would a typical percentage be? So you're sort of suggesting around 6-7%, but what threshold would that kick in?
Yeah, 6-7%. You're probably looking 6-7% for a standard cafe. If you did that, so the standard would be 10%. So let's say that kicks in at $1 million. If you're paying 100,000, so if you renegotiate that down to 7%, it then kicks in at 1.45. So you're giving yourself a 500,000 buffer, if that makes sense.
Yeah.
So
perfect.
If you were to just negotiate that one figure from 10 to 7, you're buying yourself 500,000 worth of income that you don't need to pay further rent on.
Okay. Yeah, and the impact on the bottom line, obviously, that's pure profit that you wouldn't you wouldn't have had otherwise. So that kind of cost reduction, that's I mean, I was going to say an easy win, but it's not an easy win. It's a negotiation, but if you can get that, that's going to have a significant impact not only on the profitability but the value of the business as well. So definitely worth giving that some thought. That's fantastic.
Yep.
Okay.
Guarantees is another big one. So I think you'll find more and more retailers are trying to certainly negotiating out personal guarantees. So this is an interesting one. So personal guarantees, obviously, if the business should close, you're guaranteeing the lease personally. So if it's a 5-year lease or 10-year lease at 100,000, you're guaranteeing the whole term of the lease personally.
Okay.
So
and the landlord, just break that down. So if you've got a 10-year lease, for example, and you're 4 years in, and for whatever reason you walk away, with the personal guarantee? What's the liability? What's the risk, if you like, for somebody signing a personal guarantee?
So the liability would be the rent that is still due and payable until the site is released.
Okay.
So however long that goes for.
So if you've got $100,000 a year, you duck out at year 4, you're up for $600,000.
Yeah, that would be the worst case. You'd be liable for the make good component. So if the landlord had to crash the site and bring it back to a bare shell, which can be anything in a cafe from $30,000 to $60,000 sometimes on top of that, all legal fees. So you can see that it starts adding up, and that. So if you've got personal guarantees on that, they can come after your house. If you've got obviously assets, they'll come after that. So if you get a chance.
Sorry, Julian. I was going to say,
That's
if
right.
you're looking at you're negotiating a lease and the landlord's pushing for a personal guarantee, are there any ways you can kind of get around that? Is it literally just going?
So I think you'll find that look, there's certain circumstances and certain landlords, obviously, that may have an upper hand and just say, well, we're not doing a lease unless there's personal guarantees, and you'll have to address that. You'll have to address that, location by location. But the way to negotiate your way out of it is, on average, you would be required to pay a 3-month deposit on a commercial property that the landlord obviously hangs on to, for the term of the lease. So you can negotiate that to be a little bit higher in lieu of personal guarantees. So you've got to have the cash to be able to do it. It is a bit of a catch-22, but if you've got the ability to be able to pay another month's bank guarantee or deposit in lieu of personal guarantees, then you'd prefer to do that, and then that becomes the component that you risk.
So you basically, you're reassuring the landlord that they've got some security by putting down a bigger bond in lieu of you giving away a personal guarantee. So then you've got limited liability in respect. It's just the business. It's not yourself that's liable should you exit the lease before. Okay. That makes sense.
So one of the keys to negotiation, and we'll cover this in a court, maybe a stream a little bit later, but never give anything away without getting something back, if that makes sense, right? So if you go to the landlord and you say, I don't want any personal guarantees, I want lower rent, I want this and this, and the landlord's going to go, well, what do I get? So I'm going to give you more money in a bank guarantee or a deposit, but I want this back.
Yeah,
so
that's right.
It's trading. Yeah.
Good tactic. Yeah, good negotiation. Okay. Before we move on, any other key points?
Look, I mean, I could talk about this all day, but I won't. I think that at the moment they're the key points, and what we'll do is we might, when you can, we'll jump in the hub and show you some of the documents that we have available in our new GSE hub. That will cover a lot more. Yeah, that'll cover a lot more.
Okay, well, why don't we do that now? So we'll just jump across. So just inside the members area of the GSE hub, and in here, under this section, you can see we've got one called Business Purchase Lease Checklist. So this is in the Start Your Business section, but we've also got it further in as well under Run and Sell, because it's a good checklist to go through at any time when you're looking at what you need to be renegotiating or considering with the lease. So if for those of you that are watching this and already inside the hub, you'll find that fairly easily just by using the search icon and just type lease checklist, and that will show up in 4 or 5 different modules. When you do that, you can download it, and you can see here, this is the one you were talking about, Julian, is it?
Yep. It's fantastic. Perfect. So, this is just a great tool to be able to sit there and just have a bit of a checklist and a bit of a tick box that will give you the key clauses in a lease that you really want to have a look at. And, again, I can talk about this for a fair while, but you can see, when you go to item number 12, how much is the bank guarantee or deposit? 13, is there a demolition clause within the lease? Can the landlord knock down the building and away you go? And is there a relocation clause where the landlord can again say, hey, I don't want you in this site anymore. I'm going to move you around the corner into a different site. So these are, really key items in any lease that you just want to have a bit of a look at when buying a business and even when you're selling it. So you're aware of it. If a new buyer asks you some questions on your lease, Paul, at least you know that these are there and you can work your way through it.
100%. Fantastic. Okay, that's really useful. And as you said, it's one of the resources inside the hub. So for those of you already members, feel free. If you can't find that, just reach out and let either myself or Julian know. But otherwise, if you're not already in the hub, feel free just to check out the gsehub.com.au and you'll get information there about how you can sign up and get access to this kind of resource, as well as coaching and support from myself, Julian, and the rest of the GSE team. Perfect. All right, Julian. So I guess we might move on then to looking at, really, do we want to talk about a new lease or a renewal? I think what we do, why don't we jump?
I'm going to go a bit rogue on you, Paul. Why don't we jump into the assignment of lease? Because I think that this is for people. Yeah, I'm going rogue.
All right,
I think this is
let's
really
talk about
important.
the assignment. Let's say, for those people that aren't familiar with the terminology, what does the assignment of a lease mean?
Yeah, so when you're obviously, I mean, this goes for both parties. So when you're buying or selling a business, the lease that we've now, we all agree becomes your asset and the most important document that you've got for your business. You've got to basically, when you're selling your business or you're buying a business, that lease needs to be assigned from the person that's holding the lease or the entity that's holding the lease into the new entity that's buying the business and effectively buying the lease. Okay. So that's effectively the transaction that happens. It's an assignment of that lease to the incoming entity, or operators, the incoming operators as well. Now, the landlord effectively does have a right to refuse an assignment of lease. It's a very stringent rules as to what they can. What they actually can knock you back on, but we want to knock that out so they don't have any choice at all, right? We don't want to give the landlord any choice at all. So when you're selling your business or you're buying a business, let's go from a buying point of view. So you've found a business, it's fantastic. You've looked over the lease, that's fantastic. You now need to get that lease signed. You've agreed to all the purchase price. You now, to get the lease assigned to you, you're going to need to provide the landlord. The best way to do it is provide them with a business and financial plan that really shows the landlord that you have the capabilities, both financially and operationally, to run the business and to fulfill your lease obligations. Okay. So to make that, you certainly do a lot of these, Paul, as well. So, to make that process.
This used to be something that, you would just leave to the solicitors at the end of the deal. It would be like, you'd get the deal done, the buyer and seller are happy, everyone's agreed on the price, and off you go, and it's almost a done deal. But now you find that from the vendor side of things, from the person selling the business, you've really got to proactively work on the lease assignment. And as a buyer coming in, you've got to demonstrate several key things to that landlord. And the way that we work it typically is almost like a forensic case we're putting together as if you're going to court to prove yourself, because effectively, as you said, Julian, yes, legally speaking, the landlords, it's going to be difficult for them to knock you back, but they still do find a way to do that if you haven't presented yourself in the best light. So the way that we would suggest that you do this is that you basically, you'll prepare things like a statement of assets and liabilities to prove that you've got some backing. You'll put together a resume if you don't already have one, demonstrating your skills and the ability to run the business. You probably do a business plan as well to show that you've put some thought into this, and that you're not just buying it on a whim. You're coming in with a plan. It's a long-term play for you. So all of those things strengthen up the case, and you put that forward to the landlord. It's going to make it very difficult for them legally to knock you back. So, as we say with everything in this whole scenario of either buying or selling, a lot of it comes down to the planning and the preparation and this kind of stuff. Like, to be honest, like I always say to people buying, a business plan is probably something you should have anyway.
You should be doing anyway. Yeah.
So there's no harm in submitting that and demonstrating to the landlord that you're a serious player.
Think about this too, Paul. It can be often the first impression from an incoming retailer to a landlord. It's your first impression. A landlord, and we'll touch on this as well. The landlord relationship, the lease, the landlord, it's extremely important. You're going to be with,
it's going to be one of the biggest outgoings,
the biggest relationships.
So you don't want to be arguing with the landlord. You don't want to be upsetting the landlord. So as you said, that first impression, if you're going back to your point about negotiation, and I've seen this a lot of times as well. That first interaction is you as a prospective tenant going in, asking the landlord for a rent reduction. I mean, that's, you know, it does happen. People do that.
Yeah.
But you've got to actually look at it from the negotiation point of view. And that's not to say that you can't get a better deal or negotiate, but you've got to, as you said, give a little to gain a little. You've got to put something forward that's going to be useful to the landlords.
You can imagine, again, if your relationship starts off on a rocky road with the landlord, you know, and it all goes through. Anytime you ask that landlord for anything in the future is always going to get knocked back, or it will be twice as hard to get what you want, right?
Exactly. So they might not be able to knock things back or say no, but they can certainly make things difficult and slower.
Yeah, and I've done it, guys. I owned a restaurant. No, 100%. I owned a restaurant that I didn't get along with the landlord at all, and I should have. There was warning bells at the start, and I shouldn't have gone ahead with it, but I did, and we ended up closing that restaurant. And my relationship with the landlord was horrible, Paul, horrible. So it's a long time to have a nasty relationship with a landlord. So. The advice that we're giving is when you're assigning a lease on both parties, you know, do the best to your ability to be able to provide the landlord with everything that they need, be as professional as possible. It will make the sale go smoother, quicker. You know, and again, if you then find that you need to ask the landlord for anything, they'll do you favors for sure.
100%. Yeah, it's definitely somebody that you want on your side throughout the entire process, but especially at the point that you come to sell as well, because you're going to need their support.
Yeah. Yep.
Yeah, excellent. Perfect.
All right.
Anything else on the assignment?
No, I think that's you know, again, just to your point is you know, you should be doing business plans and planning anyway. So I think that, you know, it's not anything over and above what you probably should be doing to provide the landlord or the assignment of lease information. So yeah, and I think it's really important to get on the right foot with that.
100%. Fantastic. Okay. Well, big thank you to those of you that joined us live. And as mentioned, if you're watching this after we've finished streaming live, do feel free to post any questions around commercial leases, anything to do with leases you would like to ask. Post them in the comments below, and Julie and I will jump in and do the best that we can to answer those for you. And keep an eye on the group. Sorry, Julian.
Yeah, no, that's right. And have a look at the hub, guys. The GSC hub is effectively operational, and there's an amazing amount of information in there. And as Paul said, we're here to help in every way possible.
100%. That's fine. And keep an eye on the threads, keep an eye on the group, and those of you that are on the email list as well, check your emails, because Julie and I will be scheduling more of these, and we'd love your feedback on things that you'd like help with. If anything to do with buying a cafe, operating or running a cafe, feel free to let us know, and we'll do what we can to organize something which hopefully will deliver you the help and answers to the questions that you've got. So perfect. All right. Thank you very much, Julian. Yeah. Have a good rest of the evening. We'll talk soon.
Thanks, guys.
Thanks, guys.